In terms of pipeline that you're looking at, we saw the bank earnings this last quarter, investment bank earnings. I'm just trying to understand what the future really looks like in terms of investment banking revenue, therefore coming off of advisory revenue. You have a pipeline, I imagine, in sight as to what kind of visibility do you have? Are there big transactions coming, smaller transactions coming, things that just aren't even getting to getting off the ground floor? What's happening?
Well, whatever happens, now for the rest of the year are going to be deals that are going to likely close next year. I mean, the deal we just did last week, Analog, is expected to close early next year. There's definitely more activity out there, Andrew, but I think it's going to be a very slow reopening, and there's really two main reasons for that. One of the reasons is that valuations are pretty high in the market now. So doing deals is challenging, certainly cash deals. It's interesting that Chevron's deal for Noble was a stock deal, even though they easily could have afforded cash. The other issue, which is a big issue, is regulatory. There is a lot of regulatory scrutiny on deals now, and it really doesn't matter how the election comes out. Both parties are viewing themselves as populists, so trying to get a deal done in this regulatory environment, which has been difficult, is challenging. So I think when we come out of this, which of course we will, it's not going to be any time soon that we have a very high level of M&A. There's just too many valuation issues and too many regulatory issues.
If you're right, what's going to happen to the deal ecosystem? I'm talking about jobs for bankers, lawyers, proxy advisors, accountants. The entire machine that supports this industry right now, is it going to exist in the same form 6 months from now?
Oh, look, there's still, as you saw from all the banks' earnings, reasonable amount of activity. Obviously, there'll be a pullback. I also think that these boutiques that rely on M&A, I think it's a tremendous challenge for them because deals are going to be smaller. I don't think we're going to see, there'll be some obviously, but there's not going to be a lot of transformational deals because of all the regulatory concerns. And as deals get somewhat smaller, the boutiques get pushed out because you'd much rather have Morgan Stanley on the cover of something you're selling than a small boutique. But I think for the larger first-tier firms, we've been through cycles before. This is admittedly different, but it's definitely will come back. I mean, another factor, Andrew, is people no longer look for repurchases of stock to drive any kind of value. Whether that ever worked to begin with, who knows? It's not that it doesn't have a place, but investors want people to do M&A. So it's going to be driven. M&A is a bigger strategic imperative than it's ever been. I just think because of the reasons I said, it's going to take longer to play out, but it certainly will play out. So yeah, there'll be some disruption, but it's near term.